Awesome. So the session is being recorded, guys. We're about to start our weekly market forecast. So otherwise, we're going to get into, obviously, our set list of pairs, of which is very rare, but of which we see setups on every single one of them. Yeah, it's very rare, but yeah, it happened this time. But otherwise, some of these setups obviously are more mature than others. And as well as you guys can see, most of our pairs are correlated to some degree. So we're going to have to obviously manage risk appropriately and take the setups that give us the best trading probabilities. That's the game we're trying to play. Otherwise, I will check there. I will keep checking there in the chats what you guys are saying there. I see Khaba there in the building saying evening traders. Thanks for your time, T. No stress, man. Glad that you're here, man. Preparation. We're doing the things to be done. Otherwise, let's start off with AUDCAD and then we'll go through the set list of pairs. So just to update you guys, everything that's purple, we're going to be bearish over the course of next week. On everything that's cyan, we're going to be bullish over the course of next week. So otherwise, higher time frame structure looks very much the same. We've got momentum. We've got a nice corrective structure. Let's do this. And then obviously we want to be trading in the direction maybe of this initial momentum. We're expecting, okay, cool, maybe structure wants to break and come to the 90% rule. We've got that for context. Now coming to the most recent price action, obviously no price action has been coming from the top. We then obviously bounced from here. And this is the last source of obviously sell side momentum that has managed to break a level of support. That's kind of why this is an important resistance to us. That's why we're looking at this resistance for the presence of sellers. Otherwise, come to the most recent price action, you guys can see that we came towards this level of resistance in some sort of a corrective manner. Yes, we did impulsively move to the upside, breaking some structure. All and well, we were happy about that move to the upside because we wanted to be bullish, obviously based off the impulse that we spoke about when we were looking at the daily on, when we could see everything. But otherwise, yes, we were happy about this upside momentum, but we saw that price started to decelerate as we approached this resistance over here. Obviously, we had an ascending structure of some sort. Otherwise, let's go down to the 4 hour. So basically from a daily, we can see that we're at resistance. Price action was decelerating as we got to this resistance. And now we're seeing momentum to the downside that has managed to break a level of structure, obviously showing us some potential change in the trend that we have going on here. So for these reasons, or for at least all of those reasons, we're going to be bearish over the course of next week on AUDCAD. Let's go down to a 4 hour and see where we could find those trading opportunities. Yeah, so for AUDCAD, things are not looking nice. So I guess where price action is now, things will get a little bit more exciting if price action moves. But yeah, what we've got going on here, we spoke about this ascending structure, first touch, second touch, we violated at the third touch or whatever the case is, but then we broke back into structure, retested, and we saw the momentum following through. This momentum, like we did say, was able to break a level of structure. We have a nice impulsive move, and obviously we're looking for a corrective structure. Over the course of last week, I think we were looking for that corrective structure to come and terminate here at this POI here, because obviously we've got a nice momentum shift there. As always, we want to trade where we see other people making decisions. So obviously this bearish engulfing is a nice momentum shift that shows us that someone decided to aggressively sell for whatever reason. And if price action comes back to this area, we want to sell where we see evidence of sellers making decisive decisions. Because remember that whatever we're seeing on the chart, every green candlestick is someone deciding to go long. Every red candlestick is someone deciding to go short for whatever reasons. We don't know those reasons. We don't even care what those reasons are. But what we want to do is we want to trade off the decisions of the masses. We want to trade where the volume is trading. First of all, we want to trade in direction of the volume. And second, we want to trade where the volume was active, which is obviously our momentum shift. In a nutshell, that's our trends. Obviously, if we have a downtrend or whatever the case is, this is just showing us that sellers are in control. Sellers market. The volume is down, or the order flow, whatever, all these thousands of different Englishes that they've put in this game to try and just confuse us and keep us in the learning phase, guys. Get all of that stuff out of your guys' heads. It's just going to keep you guys learning forever and forever and forever. And you'll never move on from learning because you learn one new thing and the next thing seems better than the next and the next and the next. Meantime, all you just needed was just to learn your trends, market structure, basic stuff. But otherwise, on AUDCAD, we're still going to be looking at this point of interest over here to obviously find that sell. We are at support now, so obviously we can't be making any sell decisions at this price region over here. Another thing that I want to add, so this is obviously our where we're going to add size. This is the setup that we want to take, right? We want to sell from up here. It's going to be a beautiful setup, especially if price action breaks above this resistance area there. But we do have obviously this impulse and this small correction here, and we see some momentum here that has managed to break some levels of structure. So because of this, what I did do is also kind of just go down on a lower time frame, which I would have done obviously during the week. I think we found that POI on a 15. There we go. It's there on a 15. So basically that's the highest momentum shift that we see inside of this impulsive move. And if ever there is a corrective structure that somehow maybe presents some trading opportunity to us, the first place and only place that I will be willing to sell AUDCAD is at this first POI over here. Obviously, I want to sell here because I can be able to put my stop loss above this high. I want to take a smallest risk possible, and as well as the highest place to sell inside of this momentum that we see over there. Also, I don't trust selling inside of here because clearly Asian highs are still left open. There's still Asian sellers in profit, and at some point market might come back and take them out. So we're going to leave room and kind of, I don't want to trade inside any break and retest inside of here. I'll wait and see price action coming up here for the continuation. Otherwise, if this fails, we wait for a higher sell. So I'm 100% bearish on AUDCAD. I would love that price action corrects nicely, but if it doesn't, then we see the momentum follow through, then all and well be it. Cool. We don't chase the market. Market is moving. Once the market is moving, we should have already been in. That's the system that we're trading. We're trading to find the next momentum. If the momentum is already in swing, then it means that whatever system, however we were looking at the market, we weren't able to capitalize and involve ourselves in that momentum. We don't chase it. We wait for another opportunity, obviously for market to give us another go at the momentum, if that's the English we want to use. And otherwise, let's go on to some AJ. So on AJ, things are kind of starting to shape up for that sell. That does not mean that we can't buy, because I'm going to discuss a buy as well. Otherwise, for the sell that we were looking at, higher time frame context, we got an ascending structure, right? First touch there, second touch there. We've got some sort of a third touch nonsense thing going on there. So we can go down to just the most recent price action and talk about that almost sideways moving price action, but an ascending structure. Otherwise, we had this ascending structure over here. We broke the ascending structure, but not with a lot of momentum until we saw this explosive move over here. Nonetheless, what I want to look at and what I want to pay attention to is I'm looking at the context, right? I see an ascending structure on a higher time frame. I see a deceleration at a third touch. And obviously, what am I seeing now? I see price giving me a support, price coming up and giving me a resistance, and obviously price breaking down and giving me a new lower low. This is the characteristics of a downtrend. And obviously, if I see an ascending structure, we broke. Yes, we didn't break the way we wanted to break, but yeah, I learned nicely about waiting for perfection. I think that the if I was to say I learned something last week, I learned that waiting for then there is no perfection in the market. And sometimes when I am waiting for perfection, I end up missing some good, very good trading opportunities, busy waiting for the perfect setup. But nonetheless, obviously, this is a downtrend, guys. Characteristics of a downtrend. We see already the daily breaking down and giving us information that we want to trade. We want to be sellers maybe in this market, and we're seeing the daily kind of giving us that information. Otherwise, going down onto a 4-hour, so we bearish. From a high time frame, we're 100% bearish. Going down on a 4-hour, we want to find a place to find a trading opportunity. If I look left, the only source of momentum shift that we have that the market hasn't come back to is this area over here. If we just look at the most recent price action, obviously we've got some nice momentum. After this momentum over here, we entered some sort of a corrective structure, sideways moving structure. So obviously we try and isolate that corrective structure. We've got a first touch, we've got a second touch, and obviously a potential third touch where in and around this area where we also have our beautiful momentum shift. So our probabilities increase if we wait for the sell from this area over here. Obviously, that's our higher time frame bias. Now, like I said, I was going to discuss a sell as well. I mean, a buy as well. Doesn't mean that we can't go against our higher time frame bias and take a buy if a buy does present itself. What we should be doing if we do go against our higher time frame bias is, number one, we reduce our risk. We're not taking the full risk. Number two, we're not looking to swing and look for ridiculous risk to reward ratio going against the higher time frame buyers. Obviously, we in and we out, day trades, that type of thing, because we're trading against our high time frame directional bias. Looking at this structure, obviously we've got a first touch there, a nice second touch there. You guys can see we can obviously come down and give a third touch, as much as, okay, maybe if you are looking at this momentum shift here that I don't know if we pointed this out last week, but nonetheless, we have a momentum shift here. Price tapped in once and then obviously came in for a nice deep tap. So I'm not expecting price action to maybe reject this same area again. If price action does come down, I'm obviously expecting price to break below this low and give me a new lower low. If we do get a new lower low, then I guess the opportunity might be ripe for some sort of a buy in and around this area here, the touch area over there. And I'm sure if we do go down to a lower time frame, I don't know if I saw it. There we go. Yes, I did see it. On a lower time frame, I'm sure you guys can see there is a momentum shift somewhere just over here. You guys can see that bullish engulfing. Okay. There's the candlestick. There's the red one. There's the green one, or in my case, blue. Nice bullish engulfing, nice momentum shift. Obviously, that shows us that someone bought aggressively for some reason. We don't know what reason, but we want to buy where we see other people buying. Kind of almost aligns with that touch region. So it gives us trading probabilities for us to go against our higher time frame bias. So what I'm doing on AJ is I'm not looking to buy AJ from inside of here. I should have been inside of the buy if I really was that adamant on buying already. We tapped into the zone, whatever. Things are nice and good. We've got momentum shift away. If price keeps on going from now, let's rather wait for the sell, because that's the direction that we see the probabilities aligning for us to find a day trade that we can turn into a swing, obviously, because we want that risk to reward ratio. We want to trade in direction where we see higher time frame momentum going. So on AJ, 100% bearish. Let's go on to some AU. So we start off on a daily. So I'll be a little bit quick with AU. I feel like I've stretched the structure. So momentum shift, corrective structure, obviously higher time frame. We know maybe we want to be trading in this direction, right? We want to be biased to try and trade to the 90% rule of the structure. But like AUDCAD, we're going to go down to the time frames and obviously find context. What is going on? Where are we within the market? Because all of those things govern the type of decisions that we make, govern the direction or the places where we can find probability. Otherwise, on a higher time frame, we see price action coming, or at least most recent price action. We've got momentum coming in from here. Obviously, we've got some sort of a low, last resistance before we break the most recent lower structure over there. So obviously, you guys can see we're setting up for some sort of an inverse head and shoulders. It's obviously market is market. We will never see the price action forming the way we learned it in a textbook. This is how this inverse head and shoulders, or whatever the structure is forming, is choosing to form. But nonetheless, we've got a level that we've broken, obviously below, we've broken back above. And at a later point in time, it's possible that the market can come back to retest this level of structure, obviously, before we find that upside momentum. So we've got that for context, right? Additionally, this is the last source of sellers that managed to break a support here. Where's price action? Price action came back to this area, obviously, where we expect to see sellers, or where we know there were more sellers involved here than there were buyers that bought from here. Cool. We've got context, right? Going down onto a 4 hour. So obviously, based off where we are on the higher time frame, and obviously the overall context that maybe we're expecting price action to come down, give us a right shoulder, we're bearish on AU, right? So coming down to a 4 hour, let's observe the structure and then obviously find out where our probabilities might lie for us to jump into a potential sell. So if we're looking at this overall structure, yes, we had firing, came out with guns blazing, a lot of momentum, but we entered some sort of ascending structure, expanding ascending structure. First touch, second touch. At the third touch, we decided that we're going to do something else that's a little bit more complex, but it doesn't matter. If you have rules, you will never trade in the wrong environment. One of my rules is, yes, we know that there are uptrends and there are downtrends, but there are different types of uptrends and there are different types of downtrends. If ever I break resistance and we break back below resistance, we break resistance, we break back below, that shows us corrective nature. As long as I see corrective nature, I am looking for a corrective structure. As long as I see price action breaking above resistance, breaking back below, breaking above resistance, breaking, I'm looking for a corrective structure. Still, we break above resistance, we broke back below. I'm still adjusting and I'm looking because I don't see anything impulsive. Yes, it's an uptrend, but is there momentum behind this uptrend? Clearly there is no momentum, because if there is momentum, we would have a nice solid trend of breaking the resistance, coming back, maybe retesting and whatever, and we continue to the upside. We won't see price action being corrective around a level of structure. If maybe we were to waste a little bit of time and just go a little bit deeper, why are we assuming that there is no momentum in this type of structure? And why are we assuming that there is momentum in this type of structure? Because remember, I said in the beginning that everything we're seeing are people's decisions. People are making decisions. Someone decided to sell from here. Someone decided to buy from here. Whoever bought from here was more than the amount of people that sold from here, because price action broke above this level of resistance. If these sellers are there, and these buyers are there and they're aggressive enough, these buyers are not going to allow price action to come back below this price region. Why not back below this price region? Because at this resistance, someone previously decided to sell. Sellers are interested in price below this price region. If this is a buyer's market, buyers will not give sellers a chance to see value in this price. Otherwise, let's not waste any more time and explain unnecessary stuff. Let's delete all of this nonsense and talk about the trade. Cool. So most recent price action, guys, we've got some nice sell bias momentum, nice sell side momentum. Obviously, there are no momentum shifts here on a 4 hour, so I had to go down on a smaller time frame to find those bearish engulfings, to find areas to trade. But doesn't really matter where we choose to trade, whether we choose to trade up here or inside of here, we still have probabilities on our side. Why am I saying that? This is a level of structure that price action broke above, and now we've broken back below. And at a later point in time, we can come back and retest. So probabilities lie for us inside of this area. What I've done, we've increased those probabilities by finding a momentum shift on a smaller time frame inside of there. I don't know if we need to go down on a smaller time frame to show you guys, but otherwise, same applies up here. This is a resistance that we've broken above and that we've broken back below. And at a later point in time, we can see price action maybe coming back to retest this level of structure over here. So these two areas obviously give us the best probabilities to find trading opportunities, obviously, to go to the downside. Maybe let's just go down to a 1 hour. Okay, it's cool. It's on a 15. So the two momentum shifts that we found on a 15, I just want to show you guys so I'm not pulling things out the air. Cool. So there's our first bearish engulfing over here. Obviously, we don't find any other bearish engulfing that price left. We don't see any other origin of momentum. First origin of momentum is here. We see a lot of momentum coming into the market. That's where we want to find a trading opportunity. Otherwise, we see other momentum coming into the market here. We know other sellers sold from there. That's where we want to find our second trading opportunity. Both of these levels of structure align with our structure that we spoke about on a higher time frame. Before we leave AU, before we go on to New Zealand dollar CAD, let me speak about this nonsense that I was doing over here. Obviously, you guys can see that price action, we had momentum. We've got some corrective structure over here. And yes, we've broken outside of the corrective structure. I am, on the other hand, paying attention to, okay, cool, the fact that we didn't break impulsively. You guys can see we rejected this low over here. There's no nice impulsive break and close below this low. So we didn't break this structure impulsively. But what we do still have is we do still have a momentum shift here. There's a nice big bearish engulfing, and we do still have price action giving us a lower low. We did break below this low and create a new lower low. We also have a level of structure that price action broke above and broke back below. So obviously, this becomes an area of value for us. Will I be trying to become a millionaire inside of here and add my size and risk it all and blow my loss? No, that's not the area. My probabilities, my area of probability is number one up here. That's where I can do my nonsense and stupid stuff. And up here, that's where I can go all in and forget about my trading plan and whatever the case is. Not inside of here, because this is not our highest sell. That's not our best area of probabilities. Why is this not the best area of probabilities? It's because look at how price action broke this low versus look at how price action broke this low. Where do you guys assume there are more sellers? Do you guys assume there are more sellers in this move to the downside or in this move to the downside? I'm sure we'll all agree that there's probably more sellers in this move to the downside. So we want to trade in this move, because remember, everything is relative from this resistance. That's why people add Fibonacci, whatever, look for 0.618, because everything is relative. If something was very expensive and sellers are in control and it went to this price, as long as we go above halfway, anything inside of here seems like a bargain to become a seller again. I think it's a little bit obvious, but anyway, let's leave AU. We're 100% bearish on AU. We're not going to try and become millionaires inside of this area here. But yes, we will still try and see if structure gives us an opportunity somehow, somewhere inside of here. Maybe if we give a nice ascending structure and we got a third touch that terminates here, why not? Why not try and take the trade and see if we do get the probabilities, but not adding size, not over risking, not doing all of those funny things, because this is not where we find or where we see the probabilities. Cool. Yeah. Well, as we're going through the pairs, maybe also pay attention to where my alerts are, because if my alerts are not triggered on these pairs, then there's no real reason for me to be looking for expensive trading opportunities if the alerts are not triggered. Because only when these alerts are triggered, then we start to play through, or our higher time frame bias starts to play out. It's very necessary. Can you please add NASDAQ? Cool. I do have NASDAQ on the watch list as well. Yeah. Got excited seeing DXY at the top of the list. Yeah, DXY does help sometimes with the directional bias. Does help sometimes. Let's go on to New Zealand dollar CAD. So New Zealand dollar CAD, I think I'm going to be quick with this pair because probabilities are coming very late in the future. But long story short, guys, there's our level of structure that obviously we broke below. Here, some nonsense started over here. We obviously saw support being broken below, broken back above, broken below, broken. So we know that there's a corrective structure that happened, or some nonsense happened here. Where did this nonsense start? This nonsense started at this resistance. So we've got a nice swap area, if you want to call it that, where we had price action being support, and then obviously we treated it as this resistance. And now we've got this momentum obviously breaking above these levels of structure. All I want to do is just wait for price action. Obviously, I've gone down onto a 4-hour to isolate this POI over there, but you guys can see even on a daily as well, we've got a nice bullish engulfing, whatever the case is. So all I'm just going to do is wait for price action to come here and see what kind of a structure price does present. So far, we're coming down fairly impulsively. So obviously, if we come to a level of structure or an area where we want to trade impulsively, it implies that we need to wait for a reversal structure, because there's never going to be a time where market is like obviously showing us, hey, sellers are doing something important here, and then we decide to go against all of those sellers. No matter how confident we are, we always trade what we see and not what we think. So otherwise, we need to wait for a reversal structure, obviously, for us to know that these sellers are out of the market. Yeah. Also, there's that nice, lovely first touch, second touch, third touch structure over there. Yeah, this pair is not so exciting, but we can obviously, what I'm doing is, if you guys notice here, New Zealand dollar CAD, Aussie CAD, obviously they both positively correlated because they share CAD as a quote pair. We're nice and bearish. This setup looks absolutely sexy on Aussie CAD, and obviously we're bullish on New Zealand dollar CAD. That means we're looking to hedge some CAD strength. Whether these CAD quote pairs go up or down, we can find trading opportunities on there. I do primarily want to be bearish. Obviously, even here, you guys can see there's momentum that's coming into this market. But if a bullish setup does present itself as a third touch or as a whatever inside of here, then we can hedge some CAD strength. Just in case the CAD pairs do decide to go up, then we've got a pair that will still give us something to trade. Same thing with New Zealand dollar yen. You guys can see AJ, we're bearish. New Zealand dollar yen, we're bullish. Same thing, yen quote pairs, we're hedging, obviously looking for trades in different directions, but we still at any point in time are trading where the probabilities will give us those trading opportunities. Cool. So let's speak about New Zealand dollar yen since we mentioned it. So New Zealand dollar yen, basically the higher time frame context is the same as AJ. Yes, we do want to be bearish because of all of this nice good stuff that's going on there. There was a nice higher time frame POI, 3-touch structure, momentum, all that nice good stuff, right? Cool. But otherwise, let's just come to the most recent price action, right? Most recent price action, we've got a whole lot of sell momentum, right? Whole lot of sell momentum. We've got an ascending structure. Now, let me explain to you why I'm willing to be bullish on this pair. These are the reasons why I'm willing to be bullish on this pair. Why I'm willing to hedge this JPY quote pair and trade it to the upside. Aside from we still are holding a buy on this pair, but that buy is not influencing my bias. My bias is based off what I see, not what I think and feel and holding on whatever the case is. Looking at the structure, cool. Yes, we've got corrective price action, right? Showing us that there is no momentum. We are, on the other hand, seeing a lot of momentum to the downside. So yes, we higher time frame, cool. We do want to be bearish, right? But let's just take into context what we see going on here. I see a low, and then obviously this is the previous high, and we did create a new higher high, right? This sell side momentum that we saw coming here didn't give us a new lower low. So obviously, as long as we're still inside of here, and as long as we didn't get a new lower low, we can still treat this like some sort of a range, maybe this being the low or this being the high, or at least this is support or whatever, an origin of momentum to the upside. So as long as price action fails to give us a lower low, this could still be a buyer's market. It's our assumption. Come to the most recent price action, right? Most recent price action here on a 4-hour. Yes, sell side momentum, 100%. We wanna sell in the direction of this momentum, right? But we're caught inside of a range. We've got our extreme highs there, our extreme lows over here. And ever since price created extreme highs and extreme lows, we've been stuck inside of these extreme highs and extreme lows, moving sideways. Looking at the context of after we created these extreme highs and extreme lows, I've got resistance, I've got support, I've got price action giving me a higher high, and then I've got a higher low, and then I've got another higher high. So obviously, as long as I'm inside of this momentum over here, this could be considered to be a buyer's market or whatever the case is. After I see this momentum, I've got a beautiful corrective structure over here. So all this reasoning, as well as aside, let's not even forget to mention our level of structure. If we've broken below, obviously we were corrective around this level of structure. We broke below it a couple of times. But yes, we can see price action obviously decelerating as we're coming towards this level of structure over here. So we've got a chart pattern, we've got an impulse, and we've got a moment, and we've got a correction, right? So this is giving us context as to, or at least we're adding confluences to support our bullish bias, because remember, anyone can trade in any direction at any point in time. What matters is that you're adding the confluences and you're trading your areas, whatever areas of probability and whatever your system presents to you as probability and an opportunity. That's exactly what we're doing, because anyone can make money in any direction at any point in time. Why we make money is because we find areas that support our trading system, whatever the case is. But nonetheless, we've got an impulse, we've got a corrective structure, first touch, second touch here, and obviously we've got some sort of a third touch over there. Also, we've got this level of structure over here that we've broken below, and that we can. What I want to do, what I want to say about New Zealand dollar yen is that maybe let's not be impatient. Okay, cool. I already do have a buy that's on this pair. I'm still holding this buy over here. This was maybe the risk entry, the presentation of the risk entry. The reason why I want us to exercise patience on trying to find a risk entry inside of here, and let's rather wait for resistance to be broken, is because you can see on a 15-minute, we still have all these Asian highs that have been left open. Lot of enticement for price action to come and take. Oh, there's so much money, so much Asian sellers that are still in profit, and price can and should at some point in time come and take them out. The Indians don't get money, guys. The Indians never get, the Asians never ever leave the day or the week or the whatever with the money. Whoever's in profit at the end of Asian session is out of the market by the end of the day or the end of the week or the end of the whenever. So let's just go back up to a higher time frame just so that we don't lose ourselves. What I wanted to say is that, cool, we're still in a downtrend. We're still making lower lows and lower highs. Let's wait for price action to give us a sign that we have buyers or that someone is willing to buy this pair in obviously continuation of this momentum here. Only and if only price action breaks this resistance, let's only then start to look for a reduced risk entry or a scale in or the next trading opportunity or whatever the case is. As long as maybe we're still breaking down like this in a corrective manner, let's wait and let's maybe even do analysis again on Monday morning just to see what's happened on this pair. But nonetheless, we're hedging JPY code strength. Obviously, we're bearish on AJ. We're nice and bullish on New Zealand dollar yen. Oh yeah, like I was saying, you can't. It doesn't mean we can't buy this trading up this pair, this JPY code pair. But you guys do see. Excuse me. If you were to buy one of these JPY code pairs, there's better probabilities for you to buy New Zealand dollar yen than AJ. So we're still trading our technicals. as much as we're choosing to hedge and we're choosing to do all these fancy things to manage risk differently or whatever the case is, we at any point in time will still be trading a plan that has rules that allows us to get in and to make decisions at the end of the day. Let's go on to some US30. US30, maybe let's go on to, we don't normally go on to a daily, but maybe let's just go on to a daily just so that I can show you guys that we're in. I like to feel like this is the only time market makers are actually working. This is the only time. So otherwise, we're stuck in some heavy corrective structures, right? We broke above resistance. Obviously, you guys can see we broke back below. Any resistance and any support that we broke above or below, you guys can see that we've been working those highs and working those lows. So obviously, price action maybe is moving sideways to some degree or whatever the case is. My only conclusion is that this is a fair value area. Obviously, you guys know, if you did your study on your whatever theories, if you looked deep enough into Forex, you would know that price moves fast when one person or someone's in control, and obviously after every impulse we have got a correction. The reason why we've got a correction is because there's both buyers and sellers that are trading in the correction. And what is the point of the market itself? The whole point is to match buyers with sellers. So the price or any market will stay for as long as there are buyers and sellers transacting at one price region or in between, the price will stay there for as long as possible. At the same time, this is the perfect environment for market makers or whoever for the volume to work and add their orders for whichever direction they choose to go at the end of the day. Why is market impulsing here? Because there's more buyers than sellers. Market doesn't like there to be a lopsided thing. Market doesn't only want to give buyers an opportunity. So market is moving as fast as possible, as high as possible, because at some point in time, when things get expensive, someone will eventually obviously see the value of selling that asset. Eventually, it'll be so expensive that there'll be more sellers than buyers. And same thing, if price impulse is down, it's moving fast to go and look for buyers. It's going lower and lower and lower and lower and lower until it finds some buyers. And once it finds buyers, then obviously we're going to consolidate because we've got both buyers and sellers transacting. So same thing that's going on inside of this nonsense here. There's both buyers and sellers that are doing their magic inside of here. That's clearly obvious to us. The moment we get stuck inside some sort of a range or whatever the case is, the best thing for us to do is always to try and find chart patterns, structures, or whatever the case is, because that makes things so much more clear. It increases our probabilities. And obviously, we need those to find trading opportunities anyway, if that's what your system is based on. But let's get to the context, right? So context, yes, last area of resistance that we have that has broken a level of structure. That's why it's important to us, because we know that the sellers that came in here were more than the buyers that bought from here. Obviously, yes, we've got a descending structure, all that nice good stuff. But even if we were to look at this descending structure, we broke in a corrective manner. We broke and then we started chopping. So still, we're moving sideways, indecision going on inside of here. Nonetheless, for us to make sense of things, we're at resistance, right? At this resistance, let's look at what happened. We came here impulsively, price action. Okay, let's go down to a 4 hour now, because daily we finished speak about the chop. We finished speak about all the aggression that's going on in US30 right now, showing us that there's a lot of money moving in a lot of different directions. People are very uncertain about the world or about the state of what's going on right now. But otherwise, we decelerated towards the upside. Whole bunch of sellers obviously breaking price action. Nice momentum for us to be looking to trade in. After this momentum, we obviously ended up in some sort of a sideways moving market. We've got resistance over there. We've got more resistance over here. So obviously, price action is chopping, moving sideways. Now, as long as we're inside of this impulsive move, I still feel very safe being a seller. Another thing that I want to add is that we've got a level of structure over here that we've broken above and that we've broken below. And at a future date in time, somewhere in the future, we could come back to retest. Adding more context to all of this that's going on over here, just looking at the most recent structure, isolating, because obviously we're moving in a corrective structure. Our job is to isolate corrective structures if we find corrective price action. So obviously I'm isolating a corrective structure. First touch, I see a second touch, and there we go. We have got a potential for some sort of a third touch. My third touch aligns with some level of structure that I could be looking for a trading opportunity. So now I know that for me to find good sell bias trading opportunities and probabilities, I can find them in and around this area over here. On the other hand, T.Mayne is very adamant that now, guys, now I am calling a market crash. I've never called a market crash before, but now I am sure. I don't even care, even if price action, if US30 decides to come and break new and create new higher highs. Now I'm calling the crash. I feel like market is ready now. I don't even care if market comes and break up. I'm still calling the crash from now on. T.Mayne is very adamant on this crash now. So since he's assuming that, cool, it's okay to be a seller in the market right now, he's just looking at the most recent price action. Obviously, we just created a new lower low right now. We've got some momentum over here. And obviously, after we got this momentum, we maybe could create some sort of a corrective structure. So obviously, if price action doesn't give us impulsive price action to the upside and we end up correcting, then you best bet T.Mayne is still going to be a seller in US30, obviously looking for that corrective structure to terminate somewhere here where we find the sellers. We've got a nice bearish engulfing, nice momentum shift. That's where the sellers were. That's where we want to find trading opportunities. So otherwise, the only other place that I will be able to sell US30 is inside of here. Otherwise, I'm looking to sell very much up top. In terms of a buy, let's just wait and see what Monday does. But yeah, I don't want to forecast any buys now because I'm honestly not bullish on US30 higher time frame. We've got like 2 minutes left. Someone did request, we do have, okay, we've done New Zealand dollar CAD, New Zealand dollar yen. We've got GA. Okay, let me just show you guys the structure, just so at least you've seen it, even if we don't explain it or whatever the case is. Just so that you guys have seen it. Momentum shift, obviously corrective structure, first touch, second touch, potential for price action to give us a third touch at that momentum shift for buy. Other context that maybe is important, we've got an impulse, obviously momentum, managing to break levels of structure on the left-hand side, and obviously massive correction. So that's kind of why we're bullish on GA. Let's just move to NASDAQ because I did see someone did request NASDAQ. So maybe it's a little bit more important than the other pairs because I want to stay relevant. Like, why talk about stuff that no one's interested in? Anyway, NASDAQ, we've got descending structure, right? We've broken this descending structure with nice momentum. We've also got a nice resistance in this area over here that we've broken above. So naturally, so we're waiting for some sort of a retest. So on NASDAQ, I'm bullish on NASDAQ. So we can hedge these indices if we choose so. So NASDAQ, we've got a beautiful momentum shift over here. Obviously, nice original momentum, being able to break levels of structure over there. After we see this nice momentum, we've got a corrective structure. First touch, second touch. Did we actually touch there? I don't think we touched. Let's just go down to 1 hour. No, we did not. So we'll see what happens there. Maybe price action will give us some grace and then eventually give us a good entry at a third touch that aligns with the 4-hour POI. If we do get structure that aligns there with a nice third touch, we're still inside the structure, then why not buy NASDAQ? Since they lied to us and told us that they will buy forever and ever and ever. Yeah. It's all about timing at the end of the day. Someone bought NASDAQ last year and their whole portfolio is down 70% or 80% or whatever, however much NASDAQ is down from the high. So we call bluff on those that tell us that these things are a higher time frame bullish, because at the end of the day, if you enter at the wrong time, you will still lose money. Anyway, AUD Swiss franc, why are we on a 1 hour? I mean, USD Swiss franc, why am I saying AUD? USD Swiss franc, we spoke about it last week. What we were waiting for, the reason why it's here is because we said that only this POI will only become valid to us only when we break this resistance over here. Guys, yes, we did tap in, but we didn't tap deep enough. There's still an area on a 1 hour that's a lot lower that gives us way better trading opportunities and probabilities than where price action ended now. That's why it's still here. Let's see if price action does come and break below this low. If we do break below this low, then we're setting up for